Time now for an in-depth look at the market news on this Monday, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, thank you for making time today.
Happy to be here.
So after the U.S. and China announced their Phase 1 trade deal that led to a record year in the U.S. financial markets, the stock markets, a different situation here in Korea, you might say, but it's the last day of trading. What's the story in Korea and globally?
Okay, well, in Korea, the stock markets, as you pointed out in the last story, has been mixed. If you look at the last 2 weeks or so, KOSPI has been on a roughly downward trend, while KOSDAQ has been on a roughly upward trend, but it's very slight. It's more or less flat. It's been a very uneventful week, both in Korea and globally. There has been no major or surprising news, so I think that explains why the Korean markets are so calm. The big news is the U.S. market. The U.S. market last week has hit record highs. Some of the indices fell a little bit on the end of the week, but still, they're very close to record highs. They attribute that to the so-called Santa rally. Whenever the end of the year comes around, the stock market tends to go up. But the problem is are these highs justified? It may be that the very low interest rates, the 0.75% cut that they had throughout this year may be driving the market, because if you have a low interest rate, you really can't go anyplace else than the stock market to get high returns. So there's slight worries about whether this is a bubble or not. U.S. does have a fairly strong economy. It does have a very tight labor market, but still, it's not clear whether the current economic situation completely justifies all these highs. The European and Chinese markets, they also seem to be rallying, though not as high as the U.S. markets, and that's probably because it's following the trend of the U.S. market.
Yeah, well, speaking of economic indicators, according to Statistics Korea, we have three key ones: consumption, investment, production, all improving in November, and possibly signs of improvement in the 6 months to come. What's your outlook for the new year?
Okay, well, it was a fairly good report. The production rose by 0.4%, led by the services. Services rose by 1.4%. Manufacturing didn't do as well. Consumption rose by 3.0%. So just with these numbers, it's very good. And then the business investment rose by 1.1%. So that is also good as well. Slight bad news may be that construction fell by 1.8%. But the current economic activities index rose by 0.1, and advanced economic activities index, which signal possible future activities, rose by 0.4 points. So that seems to be a good signal for going onwards. But if you look at the report in more detail, there's some worrying trends here. First of all, the production was led by services, mostly in wholesale and retail sales, and consumption was led by semi-durables such as clothing, game gear, and durables such as automobiles, electronics, and furniture. And the Statistics Korea attributes much of this to Korea Sales Festival, the so-called Korea Sale Festa that they had last month. Now, when we had more than 3.0% increase in consumption in the last year, in March and August, the following month we had a large fall in consumption. So whatever temporary sales that they had probably cannibalized future sales. We'll have to see whether that is true this time as well. And then the business investment, even though it rose by 1.1%, most of it seems to be driven by investment in airliners and airplanes. So Asiana and Korean Air probably received pre-scheduled airplanes that they had contracted for. So we'll have to see whether consumption and business investment continues. Construction. The reason that the Advanced Economic Activities Index rose so much was because they got a lot of orders, which is probably for civil engineering SOC projects that the government has promised in the new budget. So we'll have to see whether this is a spark, just 1 month spark, or whether the government will actually succeed in lighting the fire and leading the recovery. But right now, the factors which made this November's report so good seems to be a 1 month event.
Got it. Well, you mentioned consumption there. Looking ahead this week, we'll have consumer inflation numbers coming out. Of course, inflation's been extremely weak this year. Also, we'll have the release of the minutes of the latest Fed meeting. That and what else should we watch this week?
Okay, well, on the Korean side, we have the Business Sentiment Index. The index was 74 in November. It rose by 2 points. So there seems to be a slight increase in optimism. We'll have to see whether that continues. And then the Bank of Korea reveals the report on market-weighted interest rates. So that's the actual market rates. We'll have to see how much difference there is between the policy rates, which is 1.25%, the lowest in Korean history, and the actual rates. So that should be a signal on how well the monetary policy is working. And then more than statistics, the more interesting things will be the year-end speeches. We have one by Bank of Korea Governor Lee Ju-yeol on Tuesday and one by the Vice Prime Minister Hong Nam-gi on Friday. That should give a clearer indication on how the government and the Bank of Korea wants to proceed with policy next year. And then on the foreign side, this week we have figures on U.S. current account coming in and U.S. ISM Purchasing Managers Index, which should show how the state of the trade in the United States and the how well the U.S. economy is doing. U.S. economy seems to be moving away from possibility of recession, but we'll have to see the Purchasing Managers Index to see whether the numbers back that up. And the current account, if it gets worse, then President Trump will probably step up on his protectionist policy next year. So we'll have to keep an eye out for those numbers.
All right, Professor Young, we'll have to leave it there for today. Thanks so much for coming on, and Happy New Year to you.
Thank you, and Happy New Year.